Okay, so I'm just in one of the teepees at the First Nation University, and I wanted to share some investment information. So if you're an aspiring investor, if you're interested in growing your wealth, this video is for you. One of the things that is going on in the economy right now, in the investment markets, businesses, we're going into a recession. What is a recession? A recession is 2 or more quarters where we're experiencing losses in the economy. So one of the prominent stocks that basically track a number of the stocks throughout the market is like the Dow Jones. And that basically is one of the indicators along with the S&P. Those are big stocks that are an accumulation of multiple stocks that basically give you a snapshot of the overall market, the overall economy in a way. And so when those stock prices are consistently losing value, they're going down, that is just an indication that we are in a negative spiral. We're in what's called a bear market. And so when we are in a bear market for 2 quarters, so that's about 6 months, that is an indication that we are in a recession. And so the second quarter, release comes out in July. And so more likely, just by the way that things are moving, we are going to be in a recession. If not, we already are. So why am I sharing all of this? I'm sharing all of this because it is actually one of the prominent times where you can actually grow your wealth. And what's interesting about it is that a lot of the companies that we see losing value aren't necessarily companies that aren't doing well. Fundamentally, they may be still doing extremely well. And so that's a great opportunity to be looking at what the price value of those stocks are and looking at the type of company it is and realize that company is still doing well. They're still a good company. You still believe in what they're doing. And so it's basically a discounted rate. It's accounting for the economical pressures that we're experiencing, of course, after COVID happening and during this recovery phase that we're supposed to be in right now. And so I wanted to share one of the strategies that can be really helpful for you to be growing your wealth. And one of those strategies is what's called DCA. Okay, it's called DCA, and DCA is dollar cost averaging. I'm a little distracted by the winds because it's windy out here. That's why I came into the teepee. But nonetheless, dollar cost averaging, DCA. And what that means is that let's say you first bought a stock at $100. You bought a company that you believe in, and you bought that stock at $100. And we're experiencing a bear market. Let's say the overall economy is going through its challenges, and so it's lost some market value, and now it's worth $50. So instead of being upset at the losses, what you can do is actually buy it at $50. And what you've done is you've dollar cost averaged that stock price to now be 75, right? 150, the middle is 75. So now the value of which you've purchased those stocks goes down, right? Dollar cost averaging, and you're decreasing the price that you've paid. And so what happens is when the economy starts to recover and that company starts to increase its revenue, it starts to go back into positive profits, and then those profits get calculated, and then those profits then get shared to the shareholders. And when that starts to happen, your profit margin increases because you've purchased those stocks at a more affordable rate or at a discounted rate. So we're going into a recession. There's a lot of information out there that will basically determine that. And what I think is important for y'all to be aware of is dollar cost averaging is one of the best ways that you can grow your wealth. Normally, after recessions or market crashes, it goes into a bull market, so upwards, so it's increasing in value for many, many months. And so these market crashes are usually temporary, and the bull market is usually longer than the bear market. And so with that being said, buying companies that you believe in, that you might consume on a regular basis. For example, let's say you're watching Prime, right? You might want to buy Amazon stock. Let's say you watch Netflix, you might want to buy some Netflix stock, right? Those are just some really simple examples, but those companies aren't going anywhere. They're here for the long run. And so being able to purchase those stocks at a discounted rate, which is lowering your dollar cost averaging, which is actually going to increase your profits. So that's what I'm talking about on one of the ways that you can grow your wealth when we're stepping into a recession. So save your dollars to invest your dollars so that your dollars can then appreciate. If you're just saving your dollars, you're losing value because of inflation and all of those things. The more printing of money, the less that money is worth. If you want a deeper dive into what I'm saying, you can check out my previous video talking about exactly that topic. But I wanted to explain to you about dollar cost averaging, depreciating or lowering your dollar cost averaging during a recession when stocks are low, when stocks are at a discount. It's actually a great time to buy. I've been buying, I've been adding to my position, and I'd love to share with you more about my portfolio, but I'm gonna save that for another video. So I hope you learned something. I hope that it's helped you increase your wealth. I hope you can take the information and apply it into your life so we can grow our wealth together. With that being said, I'll see you again in a good way.